Thank you for tuning in to another edition of the Vulcan Report. This end of day report is for trading on Wednesday, March the 1st, 2017. Well, the markets responded favorably to the words that came out of the president's mouth. Wall Street liked it a lot. A lot. A whole heck of a lot. Enough to send the Nasdaq and the Dow to new historic highs. That's right. We closed near a new high today in the Nasdaq. That's right. So, my question to all of the people calling for market crash, has your bank account crashed yet? That's the question we should be asking. Not when or if the stock market is going to crash, but when did these market naysayers, when did their bank accounts crash? Because they must have infinite pockets if they're going to keep shorting this market only to get their heads handed to them. You can see the TQQQ up lovely today, ending the day almost up $3. That's right, $3 in your hand. All right? The lucky ones were able to catch this move. Imagine being able to catch $3 on a single trade and do that consistently. See, day traders can't do that. You're lucky if you make $62 day trading. That used to be the national average way back in the day, back in the late 90s. I'm sure it's probably closer to zero now because there's no way you can win against the robots. Not scalping type day trading like they used to do back then. You can day trade and do well, and swing trade and do well. Even do some position trading and do well if you're trading with the trends. But trying to scalp is a losing bet for you now. You cannot do it. You have to find a new methodology. The old ways of making money on Wall Street don't work anymore. All right? It just doesn't. What are you going to do? You have to learn how to follow the algorithms. That's what it's about. Looking at this NASDAQ chart, do you see anything bearish on this chart? I've been saying this for months. Is there anything bearish on this chart? I don't care about your economic indicators. I don't care about the debt. I don't care about any of that. You want to know why I don't care? Because as a trader, I only care about what the market cares about. If the market doesn't care about that and is shrugging it off and decides it wants to pay me more money, then I'm going to take that. I'm being rewarded now for trading with the trend. I'm being rewarded for this. You who are shorting this market, steadily calling for tops. Every time you see a pullback, you're getting your face ripped off back to the white meat. When are you going to stop calling for market crashes? When are you going to stop? I know your bank account is on zero right now. Your trading account is blown up, but yet you're still calling for market crashes. Are you hoping to make some of your money back? We know your put options are cabinet right now. All of your put options are cabinet worthless. Zero. Expired worthless. Stop shorting the market. There's nothing bearish on the screen. Stop it. Stop it. When the market goes bearish, then you want to say, oh, it's a great time to buy. You keep losing. In a bear market, you're getting punished because you keep saying, "Oh, this is value. This thing is undervalued. It's undervalued," and yet your account keeps going undervalued, dropping in value every time you buy a stock, and it plummets to a new low. What? Come to postwaytrading.com and stop playing yourself. That's what you need to do. Moving on. I'm off that soapbox. Looking at crude oil. Okay, I don't know what else to tell you on the crude oil. I understand all your fundamental analysis, but the fact remains that this market is not going to go anywhere until it gets good and ready to do so. Remember, when you're talking about the energy space, you're talking about widowmaker markets. Crude oil will bust you wide open. All right? Bust you right in your head, split your head wide open, bust you wide open if you do not know how to navigate this beast. Natural gas historically is the widowmaker market because it can move in catastrophic ways that will make you gasp for air. You will not believe the price action. Do not go into these markets half-heartedly. This thing is in a long, elongated, sideways market. It's doing absolutely nothing but trading in a wide range. And that's it. You can day trade to your heart's content, but putting on position sizes, what are you nuts? Overall, the complexion of the market is still bullish. We're bullish the Kumo cloud now. All right. We're bullish in all time frames, daily and weekly. We're bullish. Bullish as can be. But we have flat momentum. Momentum's flattened out. All right. So we're just kind of maintaining. I don't know what the catalyst will be to get it to close above 55 and make a run toward that $60 and $70 target that it inevitably wants to go to. We'll have to wait and see. But right now, you can't make something happen that's not happening. Nothing is happening. If you're trying to short this, it's taking your money. It head fakes you here and whipsaws you there. I mean, come on. What are you going to do? Faked you out here, whipsaws you again. Psych. The market keeps psyching with you. It said psych, psych. What are you going to do with that? The only thing you can do, which is wait, be patient, and let the price action tell you when it's ready to do something. Other than that, all you can do is wait and watch. So since you're not getting a signal from there, can you get a signal from here? OIH. Absolutely positively not. It's dead in the Kumo cloud. Under negative momentum. All right. And going nowhere. Just flat. Kind of low at the levels here a couple times. Expanding this range, but we're still caught in this initial thrust. So you're just in a wide range here. You're like in a $5 trading range. $4. I'll say $4 trading range. You're just not doing too much. All right. So no sign there. Let's try DIG. What can we get from the DIG? Nothing. You're under the Kumo cloud. Showing bullish tendencies under the Kumo cloud. Retracements off of the bear market low, but you're under the Kumo cloud. And you're about to hit up against resistance. And then once you get there, you got major resistance at the bottom of the Kumo cloud. Again, you got a downtrend, a down channel. And that trend has not been broken yet. Chances are this rally will be shorted. Nothing to see here, folks. What do I think about crude oil? Absolutely nothing right now. Because the chart is showing and telling me nothing. All right, moving along. Looking at the bonds here. This is the futures. Expanding that range just a bit, testing the waters here. But again, we're sideways and going absolutely nowhere. We're going nowhere. This is a long, drawn-out situation. We've been like this for a minute, and nothing is changing. I will say this, though. Every attempt to really get into a bearish trend is thwarted. Support, rally, support, rally, support. All right. The market's really going to need to break out into some new lows to put an end to this cycle. But 149 seems to be strong support for this super elongated sideways channel that has no momentum behind it. If anything, it's bearish, but that's about it. All right, so this is a flat market, which also leads me to stick to my original idea that they're going to raise rates in between meetings without warning, middle of the day. All right, looking ahead, let's take a look at this dollar. All right, so the dollar is catching that bid, trying to close above 102. What did I tell you happens when we close above 102? Market wants to make that run. The target is 106. So this will be new support at 102. Once you clear that 104, you put your support there, make that run to 106, consolidate, come back down, test the 104, test the 102, and then oscillate for eternity between 102 and 104. That's what you're going to have. This right here, once it hits that level, like I said, this is a picture of this would be 102 to 104. And look how long. Except for instead of daily bars, it's going to be weekly bars. And they're going to just stretch it out on a weekly bar. You mark my words, that's what's happening, just like I told you. We're on course to do exactly as I told you. Moving along, let's take a look at gold. All right. They tried to smash the gold down on the intraday basis today. And what happened? What did gold do? Gold did what I told you it was going to do for the last several videos. I even said it on the interview with V, the guerrilla economist. What did I tell you? I said every attempt to smash it lately is ending in failure. It's only going to make it stronger. I warned everybody about that. Here we go again. Nice up channel. The only caveat that you got right now in your favor for those with the bearish argument is that the trend line support here is still in the Kumo cloud. Needs to get out and up over this Kumo cloud. Help lift the price action. Then we can make that run to 1300. All right? It wants to go to 1300. Now, it could have some headwinds along the way. Right now, it has some resistance that is kind of building right now. But we still have, on the weekly time frame, we have bullish momentum overall. All right, the day chart is not giving you a clear picture because it's all a little choppy. But on the weekly, we're still very much bullish, and we're in the Kumo cloud of death. So a lot of funny things happen inside this vacuum. Anything can happen. But right now, the complexion is still bullish. Taking a look at silver now. Silver is doing a little bit better than gold. It's a little bit stronger than gold. This is on the verge of pushing out of this Kumo cloud, closing above 19 and making that run to 22. All right, got a long way to go, but this is the pattern, the course that it is on. So it's still looking good here on the weekly chart as far as silver is concerned. Looking at the daily chart of the silver, and we're still bullish the momentum. Last but not least, looking at natural gas. Making that run up toward the bottom right here of this trend line resistance. It wants to get up to that 280, 290-ish level. And I think it's going to do it. I think we're going to even be able to close and get to the 3 handle again. This seems to be the course that it wants to take. Much resistance right here, though. Got a lot of past bearishness to overcome on the way back up, but we also have a few gaps to fill along the way. So that's why I believe we're really going to get to that $3 level. To see the picture a little bit more clearly, as I showed you in the prior video, you need to look at ticker UNG. As you can see here, we're already attempting to get up to fill this first gap, and then we got one more gap to fill back up in here. Alright, so we need to deal with the gap from February the 10th. And that's going to put us at the $7 mark, which corresponds to the hard line trend line resistance top side right here. So this is where we are. This is where we're going. This is what everything is looking like. Can anything happen and throw a wrench in this? Absolutely. We trade what we see. We go by what the chart is telling us, but then we have to trade what we see and also revert back to look at what the algorithms have to say as well. So there you have it, folks. That is the full picture for now. Remember, there is a plethora of training materials on the Learning Academy. So do yourself a favor, educate yourself, learn how to navigate these waters, learn how to trade these markets. Come over to postwavetrading.com, sign up for the weekly postwave price triggers, put some money in your pocket, learn how to trade these markets, learn how to hedge your physical holdings, learn how to provide additional income for both you and your loved ones. You owe it to them and you owe it to yourself to do that. And most of all, education is key. How you going to move ahead in life if you don't educate yourself? Learn about these markets that affect every aspect of your being, whether you want to admit it or not. The world is now being taken over and run by algorithms and robots. Learn how to navigate this and put the algorithms to work for you instead of against you. Bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can, give nothing back. Peace.